Good morning, everyone. I hope you all geared up for day 2 of ChangeNOW. I hope you had an amazing day 1 if you were here yesterday. I'm Sabine Flechet. I'm the co-founding partner of Masawa. I'm also the senior venture advisor at the Purpose Foundation. And leveraging these 2 roles, I'm here with my team and with the panelists to decomplexify a topic called corporate ownership and governance, and to try to understand how the deep design of your organization can actually foster long-term purpose. So, do we have any founders or entrepreneurs in the audience? Raise your hand. Yeah, a couple. So, have you ever questioned the organizational structure of your company? And have you ever thought that this was actually counterintuitive, nonsensical, to the purpose, the mission of your company? Well, we usually kind of think about what we invest in, right? Climate tech solutions, sustainable businesses, sustainable materials, but we never really think about how we invest and how the organizational structure, the corporate ownership, the governance model can actually influence the long-term purpose of your company and can be actually counterproductive to your mission to save the planet, to do good to the society. So let's dive into this. What is actually ownership? And I'm sure you've learned this at business schools, across countries' culture. It's a mix of rights and responsibilities, right? It's an economic right, because it can provide you access with dividends and capital gains, but it can also be a voting right, right? A voting right that provides you control over certain decisions of the company. It's also a right to pass on or to destroy. I mean, as an owner, you can pass it on to your inheritance. You can also exit, you can sell, and you can also donate. So this means that it could lead to blood and money being the key determinant of the allocation of ownership, right? Blood and money becomes the power by which someone owns something. And this is also counterintuitive, because then all stakeholders, all people that are incremental to the value of the company, are working towards one single goal: maximizing the owner's value, right? The company needs to be profitable, and who is rewarded with these profits? The shareholder. And so it means also that that value is extracted, right? So it's going outside of the company. It's not recycled, it's not reinvested into R&D, product, team, recruiting, and it rewards stakeholders that have probably also nothing to do with the company, what we call absentee owners. So this type of organizations can actually pursue more the profits versus the purpose, and that leads to a lot of kind of negative patterns, negative behavior. The first one, since you need to maximize shareholder value, you will probably have to follow growth at all costs, right? We all know about hockey stick, quick exits, and winner takes it all. We also see some negative behaviors that favor higher risk, higher cash burn, and so crunch gap situations. So everything is pretty much short-term oriented to maximize the shareholder value. There's no patient capital. And of course, I mean, we here at ChangeNOW, it's far from being sustainable. It's prone to what we call VUCA. VUCA is volatility, uncertainty, complexity, and ambiguity. And by ambiguity, I mean also that it's foster an imbalance of power, but also intransparency in the relationship between the founders and their shareholders. So my question to you, and especially the entrepreneurs around here, is there a more sustainable way to think about corporate ownership and governance model, which could mitigate the risk that I just mentioned, but also foster long-term purpose over the short-term profits? What if we could think about a sustainable corporate governance and ownership model that would allow for non-extractive economic model? What if the founders, you guys, could remain captain of your own boat, and that the value kind of created within the company would not be speculated upon and would not be directed to people who are not connected to your company, these absentee owners? And what if the profits were serving actually a purpose, right? The value created would be reinvested into the organizations or donated for another mission. So is that an utopia? Well, actually not. And I'm really, really proud to present to you a couple of companies that dare to follow that corporate ownership and that governance alternatives. And these companies, and I'm pretty sure you know some of the names here, like Patagonia or OpenAI, among the top one, share some type of alternatives, corporate ownership and governance model. They can be steward-owned, and we'll see this in further detail during the panel. They can be employee-owned or cooperatives, and they can be also foundation-owned. So is that a new asset class that we're imagining? Is that just in our head? Actually not. A lot of people, experts in that ecosystems, have actually thought through and redesigned the entire venture capital system. And just to name a few, for example, Aner Benami from Candid Group, venture capital should never have become the standard way for us to fund new business. Or Albert Wenger from Union Square Venture. Venture capital is basically a hammer, a very big and a very strong hammer, but not everything is a nail. Also, I think for a lot of companies, taking venture capital is a mistake. So what does it mean in concrete terms? What are the new rules of engagement for these alternatives form of corporate ownership and governance model? First, ownership should remain or could remain within the company. The economic rights and the voting rights could be actually handled from two different hands, which means that basically you have the concept of stakeholders versus shareholders, and you have also this concept of self-governance, which means that the governance is decided by those that have incremental value in the company. Furthermore, economic leverage is a non-extractive model, right? So you would have investors who get repayment of their investments, plus maybe an upside, but from free cash flow or from new financing, which calls for non-dilutive financing instruments, like revenue-based financing, cash flow-based financing, share buyback, convertible loans, or profit-sharing agreement. There are many, many other forms of non-dilutive financing instruments. The profits would also serve the purpose, which means that the returns would not be maximized or unlimited, but risk adequate. And you would also have a time horizon which is a bit more appropriate for such sustainable businesses, right? So patient capital. And we'll come through a little bit of the different models that exist around the world, like the golden share model, which will be explained by the Purpose Foundation, steward ownership, employee ownership, foundation owned. In France, we name this Fondation Actionnaire. So can we prove that these models are working? Do they have actually an impact? Well, there are a lot of studies, especially done by the Copenhagen Business School, which basically show that these alternatives result in better management of the company. So you have higher resilience in terms of crisis, long-term orientation, you have less failure of startups, better relationship also among stakeholders, and notably with employees, because then they are much more motivated. There's a social mobility which is encouraged, and there is, of course, higher retention. And of course, there's a strong societal impact. What if then we would not have the consolidation or the concentration of wealth just among a minority, the shareholder? So can we implement this? Why are we not having those structures more frequently? Like, why is that maybe the first time you've heard about these alternative models? Well, challenges remain, and we'll talk about this in our panel. First, most probably you haven't heard about it because there is a lack of information. There is a lack of narrative, of language for these case studies. Second, it's also very complex to implement, regulatory and legally. And finally, there is also not so many investors who dare to align their capital to the mission of the company. So we definitively need the advocates, the ambassadors, like my expert panelists, to pave the way for these changes to happen, and that's the reason why we're here at ChangeNOW.